I'm here today with Carson Block. Carson, thanks for coming and joining me. This is a real thrill for me. I've been dying to get you on the channel for a while now because there's a ton of stuff I want to ask you about. Before I do that, perhaps you could just walk people through a little bit of your background, and then we'll get into some really interesting stuff, I think.
Sure. Well, thanks for having me, and appreciate your making the trip and doing the interview. I grew up in the investment industry. My father was an equity analyst, and so I really enjoyed the process of stock research from an early age. But what happened was, over time, I had more and more bad experiences with companies and with managements. And so after I graduated from university, I went to China looking to open up an A-share equity research firm. This was 1998, so way too early. Came back to the States, did some corporate finance with a large bank for less than a year. Really did not like the large bank, the bureaucracy, etc. And so then I went and worked with my father. And so we worked together for a couple of years, equity research covering microcap companies. So at the time, I mean, these were market caps from roughly 30 million to probably about 900 million on the high end. And this was actually, it was a very disillusioning time for me because a lot of the managements that we dealt with, I later came to feel were, if not outright lying to us, were at least misleading us and our institutional clients. So in fact, we even had one company that was, a confirmed, adjudicated fraud. And my father had been an equity analyst covering that company for over 4 years. He had a very good relationship with the CFO. And I remember bringing the CFO to a meeting with my best client. I was 23 years old and I had a multi-billion-dollar equity fund as a client, which, to me was, was on top of the world. And so I brought my father and the CFO of that company, Rentway, to the meeting. And the CFO, Jeff Conway, at one point looked my client in the eye and gesturing to my father said, "In the 17 quarters Bill has been covering us, we have never missed one of his estimates. That's how good we are at giving guidance." About a week later, there came a day when the stock did not open. And guess what? Jeff Conway ended up pleading guilty to securities fraud and doing some time in prison subsequently. But it was, and that was the hardest core of the experiences that I had at the time. But, you have to remember, this is in 2000, 2001. It's the same time that WorldCom, Enron, HealthSouth, these are all blowing up. So it's the largest companies in the world. We're dealing with the smallest publicly traded companies in the US. I just felt everybody was lying to, no, I shouldn't say everybody, but a lot of managements were lying to equity investors and using sell-side analysts. So
that's a pressure that gets put on these guys, right? This farcical idea of beating the number. When the guidance is lowered and raised and lowered and raised, and the idea is to get in within a penny of it. It puts pressure on these guys to do that kind of thing, right?
Well, I honestly think that we as investors are way too fixated on quarterly numbers. Like that does not incentivize managements to build good long-term businesses. Now that said, there's the element of pressure, yes, but a lot of managements, these guys are making serious money selling their stock. Back in the 80s, there was this outcry of how management's incentives were not aligned with those of, or were not aligned with investors. And so that's when you began this movement of equity compensation for senior management, which on one level is fine. The alternative at the time was, well, these guys got paid a lot of money regardless of how poorly the companies did. But the problem is that a lot of managers have figured out how to game this system and put a lot of money in their pockets. And the thing that also I remember at the time, there were other monetizing managements, as I call them, that, we dealt with at the time. And again, at 23 years old, I learned a good lesson with one company called Tidal Technologies. This was actually legitimately a neat company. They made off-premise ATMs, like the ones that you see in 7-Elevens. They were the biggest in the world. And that's a management that really put the pedal to the metal and, sold the company out over the medium and long term in order to juice short-term numbers. And, my father and, I was the junior analyst, we didn't get at that time what they were doing, but back then they had a lot longer to file their Forms 4 showing how much stock they were selling. So I think they had 45 days. But anyway, one day it hit the tape that, after the stock had gone to 12 and, our largest client, my father's client, was had bought a bunch of stock between $10 and $12 a share. Well, it turns out that these guys were hitting the bid. And, so we got some clients calling us who were upset. And my father, called the management, hey, how do you react to this? And, their response, and this is very typical of how managements respond, and I think it's entirely disingenuous, is, well, look, I've only sold, 10% or 5% of my total holdings. Vast majority of my net worth is tied up in the company. And I remember talking to one of my father's clients and repeating that line. And this is a guy who, I didn't know it at the time, was actually a pretty serious short seller. And so we're in touch every now and then today. And he gave me a really good lesson at that time, which was to tell me, Carson, it doesn't matter what the percentage is. How much money are they putting in their pockets today? And, I brushed it off, but guess what? That stock pretty quickly, over a period of a year, went from $12 a share to bankrupt. So management, sold out to shareholders. So that was also a disillusioning experience.
Well, so you bring up short selling, which is obviously what people know you for, certainly that side of the coin. And you stand out in a world where there's this just enormous mountain of bullish sell-side analysis. I've worked inside investment banks, and I think anyone that works in there knows that the word is in, we don't want sell recommendations. There's very few of them because it's not good business, right? So what was it that attracted you to be that guy that wants to stand up and go, you know what, I'm going to start looking at this stuff the way that investors need to look at it and look for the ones that you can call out? What was it that brought you to that? Because not many people take that road, right?
Sure. Well, I left the business in 2001, or actually 2002. So I went to law school at that time, and my thinking was, by going to law school, it was kind of an amorphous notion, but what I told everybody was I felt I'd been really burned by bad company managements, and going to law school, I would learn how to better protect myself against guys like these. I didn't know in what form or how, but anyway, at the time that I left the business also, I'd been having a number of disagreements with my father where there were companies, microcap companies that he really liked as buys, and I just was telling him, like, these things are too risky. So we were having philosophical disagreements, and the thing was, I was generally better at avoiding blow-ups or getting out of a bad, situation that was deteriorating. I was better at that than I was at finding that diamond in the rough that was going to, shoot up to the moon. So at the time, my father was the one who said, maybe you should look at short selling. Maybe that's where you should be. And, I asked him, like, well, where do I find out about that? And, he could think of one person he knew who was, sometimes a short seller, but is not somebody he had a good relationship with. So I just let that notion kind of die. I went to law school. I took my first job out of law school with a large U.S. firm in China. After about a year and a half of practicing law, I left to start the first self-storage business in mainland China. So I was thinking, we'll raise money, go public, be huge, growing middle class, et cetera, et cetera. Things didn't exactly work out that way. But what ended up happening was 8 or 9 years after I left the business, 2010, my father got interested in some of these Chinese companies that had listed in the US, the microcaps, and he wanted me to help him diligence some of them. So the first one that he threw my way was a company called Orient Paper. And so at this point, I lost faith in pretty much all of the safeguards that are supposed to be built into the system, except for the auditor. And I thought auditors at that time performed an anti-fraud function. So I already figured, look, investment banks don't care. I mean, it's all about like making this year's bonus. The lawyers that companies hire, I mean, they're there to basically confuse investors. PR firms are there to, sell the story. I mean, so everybody is really aligned with management. And so I was under no illusions about that. But when I saw Orient Paper and when I saw that it had been audited, gotten an unqualified audit opinion from BDO Limited out of Hong Kong, which is, one of the 6 largest audit firms in the world, that I found stunning. And so I would later come to learn, and this is something, you might want to get into, but I'd later come to learn that auditors, their roles are greatly misunderstood by the public, and they are not there to perform anti-fraud functions. So how I got into short selling was I had this company, Orient Paper, that I knew was a zero. I mean, I'd gone and actually visited the company, and I saw that they put on this, it was really a Potemkin factory. And I had done enough business in China, and I'd even co-authored Doing Business in China for Dummies, to know that the Potemkin factory was a common scam that Chinese companies would run on Western buyers. So the Western buyer would go on Alibaba or Global Sources and think that he's talking to this factory when in reality he's talking to an individual who's very thinly capitalized. And when the Western investor would fly out to visit the factory, that individual would strike a deal with some factory, and for the day, he would rent the factory, he'd put his signage on it, the workers would change their uniforms, just the show. I mean, I already knew about this when I went to see Orient Paper.
But this is, people in the West, I live in Singapore, I've spent a lot of time in Asia, right? So you know this stuff goes on, but people in the West can't conceive of this stuff happening because it's like something out of a Marx Brothers movie.
Right, yeah. I mean, that's one of the things where living and doing business in China was very important to my evolution as an investor and, into somebody, into a short seller. Not just because there was this massive Chinese companies that were total frauds listed in the US, but because it taught me to think in more dimensions. And just when you see how in China, everything needs to be questioned. The ownership of every asset needs to be questioned. The identity of the people you're talking to. You learn, the hard way. You learn to do business that way by always having a decent measure of skepticism and doubt about what your eyes are showing you. And so basically, that's that applying that same skill set to Orient Paper. I knew it was a fraud. And I didn't really know what to do about it. I called my father up and, I said, "You're not going to go long this thing, but do you want to short it with me?" And he said he didn't want to do it. So this was actually, the time that I went to see Orient Paper was actually before they did their first audit with BDO. So I figured, okay, this is probably some mob style pump and dump. I'd grown up on Wall Street in the 90s where you had a lot of those. No way they get an unqualified audit opinion. They're probably going to dump the stock before the 10K is due in March. I've got a business to run. I don't know if I have enough time to work on this thing on the side anyway. So whatever. It's a curiosity, but I'll just move on. So it wasn't until early April that for the hell of it, I pulled up the stock expecting to see it suspended. And I saw that it had the same market cap as when I went to visit it, about $150 million. I was stunned. So I pulled up the 10K and there was an unqualified audit opinion. So that's what floored me. And then I realized, I have some runway to actually do this as a side project. I don't really know exactly why I'm doing it as a side project because I'm not sure, putting a report on it, a strong sell and exposing it is going to move any needle. But all right, fuck it. Let me do it. So it was basically just taking a flyer that led me to put that report together. And that began my career as a short seller.
Well, okay, so that's a perfect chance. I just want to go back in time a little bit, and I want to understand what it was that this connection with China. What was it that took you to China? You wanted to go there as a kid. You went out to start a business. You went there to look at the frauds. What was that particular attraction to you with China?
Sure. Well, I think it once again had to do with the influence of my father, because my father was a microcap investor and imbued me with that, that appreciation for higher returns if you're willing to take higher risk. And the whole idea being that if you can manage that greater risk, then some nice returns will accrue to you. So I began thinking at a relatively young age, probably 8th grade or so, I began thinking, okay, well, going beyond just US microcap investing, where else would I see that kind of high reward, higher risk profile? So I thought emerging markets. And this is probably around 89, 90. So at that time, the emerging market world was basically Asia and LATAM. And I figured that there were already enough bilingual, native proficiency speakers of Spanish in the US that it wasn't really worth my while. But there weren't, at least especially in my neighborhood of Summit, New Jersey, or my corner of the world, there weren't that many, I felt, Asians in the US. And so I felt that it would be easier to, overcome, or where I wouldn't face this massive gap in language skills. And also I did find it to be, for whatever reason, I did find Asia to be fascinating. The first real foreign country I ever went to, so I'm not, including Canada here, but was Japan. So I did that after my freshman year in high school, and I did a homestay there. And that was a very interesting experience. It whet my appetite for Asia. And so when I had to decide on universities, my father went to University of Southern California. I kind of assumed, I was deciding among party schools. Like, that was warm weather party schools. Those were the two criteria, for me. And USC had been at the top of the list, but, I knew Los Angeles very well because I had family there. So I almost went to Tulane. It was only on the last day that I decided, which you can make your decision, that I decided to go to USC. And what swung me back in that direction was thinking about Asia and where is a better place to go to school if I want to do business in Asia in the future. And, USC hands down much better than Tulane. So, I went to USC. I started out studying Japanese. Then I took 3 years of Chinese there. I made a lot of friends who were from Taiwan, some from Hong Kong and Indonesia. Studied in China while I was there. So, I really tried to prepare myself as much as possible for a career in Asia.
It's funny, I think of myself in 8th grade, thinking about emerging markets. It was more sort of soccer and girls. I think that was about it. So, you're clearly ahead of the curve there. But once because I did the same thing. I went to Japan when I was 22, and I got a call. Do you want to come work in Japan? I said, hey, why not? I'll go. Well, if I don't like it, I'll come home. And that kind of started my love affair with Asia. I hadn't studied Japanese. I'd studied a little bit when I was out there. But it's a different part of the world, and that was 1989, and it was very foreign back then. There were no direct flights to Tokyo from London. You had to go through Anchorage. China is a whole league higher. That's a tough place to go in the late 90s and be a Westerner trying to do business. How did you integrate there? Because it's a very hard thing to do.
Sure. Well, just to your first comment about, plan A had always been to be a professional baseball player.
Oh, of course.
It was only 8th grade that I realized, I don't think I have the talent. So then it was, okay, well, what's plan B? But in terms of China, very little was known in the U.S. about what was going on in China's business climate and, stock market especially, in the 90s. It's such a contrast to today when, if you pick up the Wall Street Journal, there are going to be a bunch of articles about China. Back then, it didn't matter, and if it did, there was just very little information anyway. So I guess what attracted me to China, I had a very naive way of looking at it, but I used to say, hey, imagine if you were the guy who brought Pepsi to China, thinking that there would be a guy who does such things. So everybody knew that China, the largest population in the world, and the economy was liberalizing and, consumption,
Well, no, but
et
that's
cetera.
interesting because I don't think people did. I think that's an interesting thing that you say. I think looking back at it now, we kind of take that for granted. But back then, I don't think people were thinking about that at all. I mean, I'm fascinated because I think it's a really bold move for a young man to make that people weren't thinking that way back then. And I guess that fits in. You think differently to other people, hence the short selling side of things, right?
Right. Well, yeah, look, okay, it probably wasn't, the, normal conversation, to be had around the high school locker. I mean, that's true. But again, when I started thinking about emerging markets and having gone to Japan in 1990 to study for a month after my freshman year in high school, I mean, that was kind of instructive, or that was helpful because that turned out to be, I mean, the peak of, Japan's economy and economic power in the world. So, by the mid 90s, it was pretty clear that, Japan was sort of waning in that respect. And when I was at USC, I was surrounded by all of these kids who, again, they were from the tigers, the Taiwan and Hong Kong and South Korea. And it was really, I mean, it so happened that one of my roommates freshman year, USC assigned us to live together, but he was from Taiwan. And I mean, this kid was wearing like Armani clothes and, Louis Vuitton, everything, had, hot cars. And, like he would tell me that, yeah, just a few years ago, we were so poor that, my three brothers and my father, we would get on one scooter and like go up the mountain to, like the local, bathhouse and, and that was what we did for leisure. And he would just tell me about like how poor they used to be. And, my mother's first deal when she started her own business, she bought a new apartment in downtown Taipei. I mean, it was incredible to hear this and it was really exciting. So yeah, I mean, Taiwan and, and Hong Kong, those things had kind of already happened. So once again, I was thinking about China. And when I went there to study the summer before I graduated USC, I mean, that also reaffirmed my, that reaffirmed that this could be very interesting because, you get there and if I had walked around with a notepad and pen, which I should have done, but, after like 3 hours, I would have had a list of, about 30 businesses that they'll need. There were just so many gaps in the economy. And there was a lot of energy. I mean, it felt like a very positive energy and things were moving in the right direction. The Chinese were excited. Westerners that I reached out to, to have coffee with, they were excited. So, yeah, I mean, it was pretty intoxicating. So, after I came back from my senior year, I did the investment banking interview thing, and after I got my first offer, I had to really think, okay, well, what do I want to do? Do I want to do the iBanking here, or, what about this China idea? And I kind of figured that if I didn't go and try the China idea, I'd always ask myself, well, what if? What did I miss? So that's what I did. And it was a lot harder than I thought, and I washed out actually kind of quickly.
Yeah.
That first time around.
Yeah, as I say, it's tough, but it's interesting. You go over there intoxicated by the possibilities, and then we'll jump back to where we were before, and here you are, cynical about what you're seeing there. And I think that this whole idea of this facade masking what's really going on underneath. I mean, you've built a very successful business out of that. So let's talk about that. Let's talk about the Orient Paper. You've seen this. You've seen what's happened. So what's the next step in that little journey?
Well, after I published on Orient Paper, the stock reacted far more than I'd expected. I mean, I thought maybe it would tick down a little bit, but and the stock went down 55%, the next trading day or the next full trading day. And, at first I was scared shitless.
Yeah, I bet.
This is, this was more than I had bargained for. So I was still living in Shanghai and I felt like a target. But what happened shortly thereafter was a number of people reached out and, they said, hey, I've been investing in the China space for a long time. This is the tip of the iceberg. what's going on really distresses me. There's so many frauds, that I'd love to, help steer you in the right direction, because I think that this was something, I learned after publishing. The prevalence of frauds was something that a number of smart money investors knew and people talked about, but nobody had been able to do anything about it. And we were the first ones to really come out and expose one of these things successfully. And so, yeah, I just began getting this information flow, and I started cracking open 10Ks of other companies, and the information would just jump off the page at me about, just how ridiculous many of these frauds were. And so that first year really was this race when some other people got into this game of publicly shorting Chinese companies, and there were so many frauds. It was just really a question of doing the work, putting the case together, and basically trying to scoop the competition who is working on many of the same names.
But that's something we spoke about before we were on camera, and that's one of the things I love about what you do is the meticulousness that you build these cases up. And I think when you say you're surprised at the overreaction and the stock falling 55%, I think that's testament to the quality of the case that you put together, because it's easy to shout fraud. It's easy to say, something's not right here, and we live in a world where people don't want to do the work. I mean, people are lazy. They just are. It's human nature for the most part. And so there's a lot of people, as you said, throwing mud at companies, figuring, well, if I pick 10 companies, one of them's got to be a fraud. The law of averages says it is in China at the moment. But you actually went out there and you did the due diligence, and you built up a case that actually stood on its own. And I think that's probably why these stocks reacted. So when you build those cases, because they're impressive as someone that just sits and reads them, it's like, wow, this guy's not holding back, and he's really gone in there, and all the questions are in my mind, the answer's like a page ahead. How do you set about constructing as watertight a case as you can?
Mm-hmm. Well, that's actually really interesting, brings up some really interesting points, because whenever I'm researching a company, I'll get conviction, or I'll come to my view relatively early on in the process. If it takes us, if 2 to 3 months from beginning to publishing a report, like relatively early on, we'll have the view. And most of the work goes into, all right, how do you build this case that, long side investors are going to say, wow, I can't argue with that, and sell side analysts. It turns out, that is impossible to build, where, obviously everybody, who's on the long side, wants you to be wrong. But the approach that I took with the first few China reports that I wrote was, I felt that I really needed to educate the readers as to, this is, especially when we were talking about government records, this is the significance of these records. All right, they are held by this ministry. This ministry has this information because blah, blah, blah. Companies are required to file information with them, every however often. This is how companies typically approach making those filings. So really needed to educate people as to how China worked, and also to dispel some of the myths that I think were propagated by these companies and their promoters. So a lot of it was education, and then some of it was just, incontrovertible evidence. I guess you could say that there was also this relying on my credibility, because from day one, my decision was, I'm going to put myself out there, say, I'm Carson Block, and I've got this self-storage business in China. I've been a lawyer here. I chaired the AmCham Entrepreneurs Committee in Shanghai, et cetera, et cetera. Put my bio out there, say I'm an expert on this. I'm not afraid of being sued or of, regulatory action, because everything I'm saying is true. And, and then basically put forward some of the information that really at the end of the day, did depend on our credibility. So, for example, the second company that we wrote on is called Rhino International. It's a company that claimed to sell these flue gas desulfurization systems to steel mills, most of which were state-owned. So for most investors, the most interesting, most damning part of that report was was our surveying. So we took Rhino's purported customers, and we got most of them to actually respond to a survey in which we were asking, do you have FGD systems? If so, who are the vendors? Tell us the type of technology, etc. And so what we found is that almost none of the companies that Rhino had claimed to be customers were in fact FGD customers. And so that's an example of where it really, for the reader of this report, that those surveys are damning if they believe that we're telling the truth and
Right.
not just making this up.
It's almost hard to believe as an investor that something so obvious someone could just be outright like, yeah, they're customers, and just blatantly lying. I mean, when you send these surveys out, are people pretty open when you ask them questions, or are they quite guarded?
Oh God, no. We had to be smart about this.
Yeah.
I mean, first of all, again, most of these steel mills are state-owned, which means that there's just a very high level of laziness and indifference among the employees who work there. The way that we got them to fill out the surveys was we pretexted that we were potential customers. We said, we're a consulting firm focused on environmental engineering. We represent a very large Western company that's going to build a plant in China, and they are going to be purchasing a lot of steel for that. And this Western company wants to make sure that it's doing business with steel mills that meet its environmental standards. So if you're interested in this order, we need you to fill out these surveys in order for our client to evaluate that. So we went in through the sales department, and so then the sales department took that to the engineering department, and in most cases made sure that the engineering department filled those out.
Set a thief to catch a thief kind of thing.
Yeah, I mean, look, I've never made any bones about the fact that when we do our research, a lot of times we use subterfuge and we use covers. We have to. I mean, a lot of people in the investment industry, kind of poo-poo that, and I think, look upon that in a pretty negative way. But, when you have somebody who's a liar, like, unfortunately, going in through the front door and asking them nicely, they're seldom going to admit, in fact, never going to admit that they're lying to you. So, yeah, I mean, we use some of the same techniques against people who, we believe are criminals.
But you mentioned there, you weren't concerned about being sued or any of this other stuff, which is an interesting topic. I remember watching David Einhorn give his presentation on Annaly Capital at the Ira Sohn conference. This must be, I don't know how long ago, but I mean, David looked like a 12-year-old kid wearing his dad's suit. I mean, but it was one of the most impressive presentations I've ever seen, because it was, again, the case he built up was virtually flawless. I mean, you looked at that thing and went, well, duh, I mean, this thing has got to be a zero. And yet it took, they sued the hell out of him, and they fought this thing tooth and nail, even though, as it turned out, we all know now, with hindsight, the thing was a complete fraud, and it did go to zero. How do you deal with that period? Because these guys are not going to just go, all right, you caught us. Okay. They're going to come back and fight you tooth and nail for this stuff.
Right. Well, that's, after Orient Paper, going into Orient Paper, again, I didn't expect much of a stock price reaction. So when the stock reacted that much, as I said, my initial, I was freaked out. I mean, I left China for about 5 weeks to try to get my head together, and also because I wasn't sure that I was safe in China. And during that time, I thought a lot about the business model. And, there were a number of hedge funds that, were saying, hey, if you put out research, or if you do research and identify frauds, we'd subscribe to it, but we don't want you to publish it. And, and look, that could have been a nice living, but I thought about it and realized that I wouldn't find it as fulfilling, because I did like the whole element of exposing these guys. And, just to be totally open about this, I had taken some lumps in China, and I felt like I finally found a way to get back at that guy, the guy who thought, thinks the rules don't apply to him and is going to do whatever he wants. So this was somewhat therapeutic for me in the beginning, just truth be told. So just publishing to a closed subscriber list wasn't going to be that fulfilling. And when I thought about it, I felt like actually, I could also make a decent amount of money by exposing these. And so the question was, can I make enough money so that the inevitable lawsuits and, regulatory, inquiries are just going to be costs of doing business? And that at the end of the day, I feel like, I'm still putting enough food on the table to make it worth all the turbulence. And I kind of figured that, I think there is, a model doing this. And so the contrast with, David Einhorn and Allied Capital is that, for Greenlight, this was, Allied was a relatively small position. And, I think also when they got the pushback, they backed off a lot of the public battles. I realized that this model, especially in the early days when I'm trying to establish my credibility, if I go out and call this company a fraud and this manager a criminal, somebody's going to go down. It's going to be them or it's going to be me. So there was this element of feeling like I had to fight for my life once I started the fight. And I was willing to accept that and just go as hard as necessary in public in order to win. So that, so anticipating, and it also really helped that after Orient Paper, I read David's book.
Right.
So I understood.
What could happen, right?
Exactly.
Yeah.
And well, also with Orient Paper, that showed me very quickly, Orient Paper's initial response to the report that I put out was, they said that my father and I had attempted to extort Orient Paper for money and that, they refused to pay and that months later, this was our revenge. So I already saw just like how quickly they'll pull the gloves off.
But now you know that it's a fraud, right? Now, as soon as they come out with that, you know.
Well, I knew
right?
before. I knew beforehand.
But if you ever want confirmation, that's.
So yeah, it was helpful because the whole moment of releasing the report from then on had become so surreal. The stock, like I said, the stock dropped a bunch, and back then, tens of millions of dollars in market cap were disappeared, and those were huge numbers to me. And and then Jim Cramer is talking about it, and this happened without warning, basically, or I didn't anticipate this. So there was a lot of surreality, and it was in a way helpful to regrounding me when the company came back and said that we'd attempted to extort money from them, because when you're taking all of these arrows, even though you knew you were 110% correct before you published it, it's still hard not to question yourself. Yeah. But as soon as they told that lie, and that's a lie that I knew was a lie in my bones, like more deeply than I could know or feel that these numbers they published were lies. You're right. That did help steel my resolve. So, and just make me feel like there's no chance in hell that I've made even the slightest mistake with these guys.
Yeah, it's funny because I've spoken to people a lot about this, and it's a common misconception amongst people that aren't in this business. And people focus on, traders being the prime example, and it's all about the money. Oh, yeah, I'm going to make so much money. And, every good trader that I've ever spent time with or worked with or come across, it's never about the money. It's about being right. It's about figuring the puzzle out, making a stand and being right. That's really what good traders and good analysts, that's what they care about, because the rest of it follows. If you're right in the trading environment, you're going to make money. If you're right as an analyst, you're going to make good calls, you're going to make money. And it's that, to me, has always been the game. It's about figuring this thing out. So as a short seller, you really are, there's contrarians and then there's short sellers, particularly in this little period we've had in the last sort of 6 or 7, 8 years now coming on for. How is it being a short seller in a market that does nothing but go up, even though you kind of can't figure out why? How do you keep yourself together and keep searching for? I mean, are we at that stage where, you know, this famous thing about the bezel always comes out in the really frothy periods? Do you feel that we're entering a stage where these shorts are really a la Enron, a la Welcome, are going to start to come bubbling through the surface, or are we not there yet, do you think?
Well, in order to answer this question, I have to differentiate myself from the more traditional short sellers, like Jim Chanos or,
Sure.
Those guys are running books that have anywhere from 20 to 100 names short. And everything is a relatively small position. I'm an activist short seller, and so I'm much more concentrated, but I'm also, telling the world what my thesis is. So from my perspective, I mean, I generally don't have risk on unless it's a name that I'm covering. And so from my perspective, 2013 wasn't really painful. A lot of short sellers got carried out, but I didn't have to sit there and, lose money passively on these companies. So the way I look at it is it's created more opportunity for me. I think one of the areas that's really interesting is these companies that are heavily financially engineered. And so Enron's a good example. I don't believe Enron failed because it was a fraud. I mean, yes, Enron was a fraud, but those elements aren't what I believe brought it down. What I think brought it down were the legal things that it was doing, things that could still be legal today, where back then they called it mark-to-market accounting. Spend a couple $100 million on a deal now, and discount what it's worth to the present. I mean, we looked at a company and we shorted publicly a company a few years ago based in Singapore called Olam that was doing a lot of that. I mean, I think they were doing a cruder version of that, but that financial engineering is so prevalent. I mean, maybe not quite on the Enron scale, but there certainly are businesses, I think, that are analogous to that. But, it's kind of funny. About a year ago, I heard a partner at one of the world's largest hedge funds give a talk. And he was saying, we love financial engineering, and we look for companies. And when you think about it, this is kind of how fucked up the world has become, that you have such a concentration of assets among hedge funds that, these guys who are managing tens of billions of dollars, they can't look at small companies on the long, like they have to find big opportunities to allocate. And so when you're looking at these large cap, these mega cap companies, really, how do these things grow? You look at the world economy today and you tell me how the average mega cap company is really going to grow. And they'll bring in a new CEO, and it's not that he's some genius who figured out, strategies that nobody else in the company could have figured out. A lot of times that growth that makes its way into the bottom line really is financial engineering. And so I think that's why it's become so prevalent. So I look at that as now an opportunity. There is an element of timing to it. And maybe back in 2013, the opportunity was a little too new, but I think with what's happened recently with, Valiant, and I don't have a view on Valiant, but that's a financial engineering story, with investors getting burned there, and also these companies having taken advantage of their engineered financial statements in order to take on more debt. I think it's becoming, for an activist investor, an activist short seller, I think it's becoming pretty fertile ground to find these companies that aren't necessarily frauds, but just where the financials are, really misleading as to the economic health of the business. And, Noble Group is another example.
Well, it seems to me from the outside that the beauty this time around in the cycle for someone who does what you do is that these companies that you're going to find this stuff going on are going to be big companies, right? They're going to be companies. They're not going to be little obscure microcaps. The big companies have been forced down this route almost by markets, by shareholders, by performance incentives, and there some rather big fish are going to come to the surface, I suspect.
Yeah, no, I think that's 100% correct. 2011, there was a very strong theme that we were obviously among the largest participants in, which was, shorting Chinese frauds listed in North America. But I do think that we could be looking at, a theme for 2016 where it's shorting heavily financially engineered companies. And yeah, I think this has started, in 2015. Noble hasn't made, that hasn't made big waves in the West, but obviously in Asia it has. Valiant is very, that is making a lot of waves. So look, this could end up being a big theme for 2016.
Well, Valiant's an interesting one because of some of the high-profile names that had big bets on this thing. And I think for anyone that's just kind of sitting there observing the parade, you kind of think, well, he's a smart guy. He's not going to get called out by something that's a fraud. I mean, and Valiant's taken down some pretty serious investors who, it seems, have all pretty much doubled down on this thing. Now, I don't know how much of that is hubris and how much of it is, conviction, and how much of it is, it's not a fraud. But it feels to me like it's far more of the former and less of the latter.
Mm-hmm. Yeah, I mean, look, they're very smart people on both sides of Valiant. Sure. And, that's what makes a market. It's unclear, in my view, it's unclear what Valiant is right now. I think it's very difficult to get an informational advantage on either side. And, to me, that's a situation that just tells me, look, stay away. I'm not going to go short, not going to go long. It's best left to play out.
Well, one you didn't stay away from, and the one I guess that put you on everybody's radar was Sinoforest, right? I mean, that's the one that really kind of brought you to attention. I mean, certainly I'm sitting out in Singapore, and that made some serious waves in Asia. So just walk us through that story, because it's a really interesting story and a huge feather in your cap.
Sure. Well, to understand how Sinoforest came about, you have to look at the company just before that, or two companies before that we shorted publicly. And that was a company listed in the US called China Media Express. So they claim that they put these advertising TVs on intercity buses in China. And that was a very, very bitter war, basically, where, there was actually a class action attorney who put up a website looking for plaintiffs to, consider suing me. And it was audited by Deloitte. It had CV Star as its largest outside investor. And, obviously, Star has been involved, and AIG has been involved in Asia and China for so long that, it was a lot of investors assumed that was the smart money. So I took a lot of arrows. It was really hard. And then we won it resoundingly when Deloitte resigned and in their resignation letter made it clear that the company was a near total fraud. So after CCME went down, this one hedge fund called me up, and the person on the other end said, "I'm going to speak at you about a company. I don't want you to tell me if you're going to work on it or what have you, but this company is called Sinoforest." And I hadn't heard of it because it was traded in Canada. So I pulled it up and I saw the market cap and the debt, and I thought, my God. And then he started just explaining some of the high-level points that they had, where things that jumped out at me were, they buy standing timber, the trees. They sell trees without cutting them down, and they buy from a trading company, sell to a trading company, and they make a 55% gross margin doing this. Yeah, ridiculous. Just absolutely ridiculous. They don't pay their own taxes. Their customers file the tax documents for them. That you don't do that in China. You don't. So there were some things that really jumped out, and I only got this idea shown to me because of winning CCME after such a high-profile battle. And so anyway, cracked open the annual report for Sinoforest. Just red flags jumping out all over, and I thought, this is the real deal. And so I hadn't done this before. Generally my team had been kind of small up to that point. It had grown sort of incrementally with each project, but We worked remotely. I'd been working a lot from the States, although I'd been traveling to Asia for meetings. But I decided to bring everybody together, and we rented a serviced office in Hong Kong. So we actually got a really nice office in IFC, which helped. I mean, having a nice environment and kind of grueling days. But yeah, we just cranked on this thing from, for I'd say, I mean, really heads down, just going at it for about 6 weeks. The work started before that, but I mean, from the time that I hit the ground in Hong Kong till the time that we released it, it was about 7 weeks. And yeah, I mean, it was.
But what does that mean? Because when you say, people talk about, we're doing long days researching this stuff. What does that look like? Because to us, it's like, okay, well, what are you doing? You calling the company saying, are you a fraud? I mean, give us a little bit of how you really do that stuff, because it must be fascinating.
Okay, so the way that, so we had a lot of documents that had to be read, many of which were in Chinese. So on one hand, I had 3 native Chinese speakers. One was an accountant, former auditor. The other was a lawyer, and the other is an entrepreneur. And so they put their desks in a cluster, and they had there were probably over 10,000 pages of Chinese documents. And so they developed a system to go through them and look for problems. And, and they would report to me at the end of the day, and I would ask them a number of questions, and we had a list of, the entities. I mean, Sinoforce had over 100 entities in the PRC. So, but the thing that was really fun about that is, I mean, at least once a day, one of them would call out and say, "Oh my God, like, look at this! Look, this must be a forged bank letter," and they'd show me, like a Chase Bank letter that was obviously fake, or an HSBC letter, or I mean, it was a lot of fun. I mean, there were just so many problems with this company. Because, it had been public for 16 years at that point in time. So it's just a long track record of filth. I mean, even going back to Alan Chan's pre-Sinoforce days where he was stiffing like a state-owned enterprise, for $700,000 US, and just the court records there. I mean, just, he was bouncing a check, and, it was amusing, but there was a lot to read through. And on my end, I made sure I read through every annual report. I read through, almost every filing from over 16 years, so that took a hell of a lot of time. And I was coordinating our field work. And so we're getting, reports coming in, from the investigators who were going to visit purported suppliers, trying to find customers. I had a phone call, and I took a meeting with their internal IR person. I mean, she didn't know she was talking to me, and and I tried to disguise myself a little bit, but basically trying to we knew what they were telling other investors and the lies they were telling, but I wanted to get some of those. I wanted to make sure they were saying that they were consistent in that. I mean, it was just we're just sifting through enormous amounts of information, and so then. We have our case. I mean, there were so many arguments. I mean, we kind of do this thing where I'll put arguments or points on the whiteboard. This company is a short because, or this company is a fraud because, normally we get maybe 5 major arguments. I mean, we had literally 20 some odd points that we felt were smoking guns that were showing that this company was a fraud. I mean, we had work done in Suriname. We had some work done in New Zealand. It was just, it was just incredible. Just everything this company did or touched was just filthy.
But at what point do you stop? Because you could go on forever, right, doing that. If it keeps unraveling, at what point do you say, okay, enough? We have a case here. We don't need any more. We need to go publish this thing.
So what was really then driving us was what was happening in the market. People were figuring this company out. I mean, a guy, an investor from China who's pretty smart money guy, reached out to me while I was in Hong Kong, and just said, "Hey, if you're in Hong Kong, I'd love to sit down and take a meeting with you." I said, "Yeah, I am." we sat down for a drink, and he said, "You need to take a look at this company, Sinoforest." And I had to really, play it close to the vest on that one, because I certainly didn't want anybody front running us. But the other, it was really what was going on in the market. The stock was selling off a lot. Short interest was climbing. And yeah, people were figuring it out. And what ended up happening, it looks like the second and third largest shareholders, which were Fidelity and Temasek, it looks like they largely sold out before we came to market. But the stock had gone from 25 down to about 19, maybe 18 by the time we published. So we were feeling a sense of urgency. Again, in those days, it was competitive. There were, other people who were exposing frauds, and, we'd done all this work, and we wanted to make sure we got credit for it. So yeah, we basically, at the end of May, we realized, like, we have such an overwhelming case here that there's no point in continuing to work on this. Like, let's get this thing out there soon.
So now is China? It feels like the China fraud thing. I can't really want to say this, but it's done. It's played out. That is not really where the focus is. Where's the next ground, do you think? We've spoken a little bit about some big multinational companies, but is there a place you're looking at, you think, this is going to be the next ground zero?
Well, we still look at China.
Yeah, sure.
China is to stock fraud as Silicon Valley is to technology.
Yeah.
Like, it's,
But it doesn't seem it's not as sexy anymore, right? The Chinese stock fraud thing. People, I can't remember the last time there was a lot of noise about a Chinese fraud. And you're right, they're going all the time. We've seen hundreds of them.
Yeah, look, the frauds have gotten better at covering their tracks in the U.S. Hong Kong certainly has, some interesting opportunities from a fraud short perspective. Those don't make the big headlines in the U.S., but it's not about headlines. It's sure. It's business. But aside from China, we're really interested in Europe. Actually, we think Europe has some companies a number of companies that are really problematic, heavily financially engineered, indebted, and where investors just haven't done the work. I think that's probably somewhat endemic in Europe, where I think a lot of investors just, there's a code that they observe where it's just very impolite to ask hard questions. And, given especially what's happened with, with interest rates in Europe and, this environment that's conducive to bad companies borrowing, I think that's really created a lot of, ticking time bombs, basically.
Yeah. So just to wrap things up, just one last question. When you sit down and you think to yourself, okay, I've got a sense that this thing might be a fraud, are there any immediate red flags you've got? I spoke to a guy, he said, I always look at the options. I always look at the options packages and the options that have been put out, and I can tell you with a fair degree of certainty, just looking at the options programs, whether a company's a fraud or not. I said, okay, fine, you're better at this thing than I am. But are there anything that you go, right, this is the first 2 or 3 places I look, and there are always telltales in there?
Well, the balance sheet is where, the balance sheet, usually when a company is committing fraud, it's to pretty up its income statement. And so that will almost always show up in the balance sheet, unless they have a very sophisticated way of committing fraud. But so when you start to see balance sheet accounts that don't make sense, blowouts in accounts receivable, inventories, a lot of CapEx, really raises questions. And there are, one of the things that we do is we really try to look at it almost psychologically. Why did management say this? Why did they do that? And a lot of times you see companies doing strange things, and management will give whatever explanation, but we say, okay, well, is there a hypothesis that better fits that action, those statements, that action? And, if that hypothesis, to us seems to be more likely, like, hey, if these guys are really, just trying to bail out and mortgage the future of the company, this makes more sense than, well, we had a customer who requested blah, blah, blah. So, those are the things that we do. So I wouldn't say that, we don't have, I don't usually have these moments where I look at it for 5 minutes and say, aha. Although, look, Sinoforest, yes. So it's really a combination of things, and just, spending a lot of time thinking about, what the numbers mean and what management statements mean.
Carson, we'll wrap up there. It's been a real pleasure. I've thoroughly enjoyed this, and hopefully we can do it again sometime.
Thank you very much.
Thank you.
Cheers.
How far can you go in the next 5 years? As an investor, an entrepreneur, a thinker? We started Real Vision 5 years ago as 4 people who came together at a bar in Spain with a crazy idea. To get started, we began with only a handful of sit-down interviews. Now we regularly welcome legends of finance like Stanley Druckenmiller, Kyle Bass, Jim Grant, Jim Burbank, Howard Marks, and so many others. We are proud to now have the world's smartest investors both share and find their best ideas on Real Vision. Showcasing more than 1,000 hours of incredible financial programming, we have circled the globe to capture brilliant conversations between the savviest financial minds on the planet. We began not knowing whether anyone would join us, and now we're often told that we're truly revolutionary, that our interviews made me rethink my career, and that Real Vision continues to offer incredible clarity in our confusing and volatile times. Those are 3 very real quotes from subscribers, by the way. So that's where Real Vision has taken us in 5 years. Now where can it take you? There's only one way to find out. You can access all of our content anytime from anywhere. Welcome to Real Vision.